Apes and Apettes, welcome back to the channel. Consider taking a load off, grabbing yourself a cup of coffee, or maybe not, and sit back and relax. Now, here in this video, I want to talk about something pretty interesting. I think this is a pretty cool video to do, comparing GME and AMC. What are the differences? What are the similarities? And kind of what's the path forward look like for both of them? Now, I'll tell you right off the bat, I like both of these names as potential runners over the next couple of weeks, next couple of months. So, one of them, both of them, they both have kind of similar but yet different qualities. Some of them are subtle, some of them are big differences. And I want to talk about that, but I do want to say right off the bat, I do like both of these names, and most of the time when one of them does well, the other does well, and when one does bad, the other does bad. And I want to talk about kind of what I expect would happen if, say, GME has good earnings. How does that affect AMC? If AMC gets a positive catalyst, how is that going to affect GME as well, guys? So kind of a compare, contrast kind of video. Let's get into it. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. So let's get into it, guys. First things first, AMC, GME. They're beasts. They're both going to run at some point in the future, and they both look pretty bullish right now. If we take a look at the Ortex data for both of these names, starting with AMC, dollar amount currently sold short, $656 million. Estimated short interest of free float, 25.06%. Free flow out on loan, 32.65%. 168.5 million shares out on loan. Days to cover, 5.38. Cost to borrow, 90.96%. And 100% share utilization. Ortex also gives AMC a short score of 89. If we take a look and compare these numbers to GME, short score of 89. So exactly what AMC is given. $1.24 billion worth of short positions in GME. Estimated short interest of free float, 20.09%. Now, you might say the dollar amount sold short in GME is double AMC, but if you look at the actual value difference of AMC and GME, pretty sizable, right? GME is worth about $7 billion. AMC is worth $2.5 billion. So dollar for dollar, AMC is more short or more heavily shorted than GME. But they're pretty close. GME still has a 20% estimated short interest of free float. That is categorized as extreme. Free flow out on loan at 29%. Shares out on loan, 77.4 million. Days to cover. This is the thing that I like GME or like about GME the most when I compare GME to AMC is the days to cover. Now, what is days to cover? Well, if you look at the shares that are sold short in GME, go ahead and pull up the live short interest. You're looking at about 53 million. That means, just you could calculate this yourself, 53 million. Add two more zeros in there. Divided by, call it 17 as the days to cover. That means the average volume is roughly 3.1, 3.2 million shares that trade hands. You can do the same calculation for AMC as well. The 128 million shares sold short divided by 5.3 gives you an estimated volume amount of about 24 million shares that trade hands. Now, this goes off of a longer term basis, not just, weeks or whatnot. There is an average that goes into that, but you're likely to see AMC's days to cover continue to ramp up as the volume has been lower the last week or two, right? 10, 12, 14 million shares trading hands is not uncommon. Now, back to GME, and let me just say, AMC's days to cover going higher is very bullish, right? That just means it'll take 17 days for shorts to get out of their short positions in GME, and it will take 5 days for shorts to fully get out of their short positions in AMC. That's all it means. So it could tell you kind of how long a duration of a squeeze might last or how much liquidity could be available. Now, the way that I like to look at days to cover in particular, my point of view and perspective, is it really shows that the volume is low, and when you get volume coming in, the stock will likely rally, right? Lower the days to cover just means lower volume. When higher volume comes in, days to cover will fall, and the stock will presumably rally from there, right? Now, if we look at the cost to borrow fees with GME, that's 11%. Not even close to AMC's cost to borrow fees that have been in the hundreds of percent range. GME also supports a 100% share utilization. So it's kind of 50-50 right now. Days to cover is better with GME. Cost to borrow fees are better with AMC. Short interest, 20%, 25%. I would also give AMC the better rating there. Now, option activity as of institutions recently. You've seen a lot of bullish option activity with GME. You've seen a lot of bearish option activity with AMC. And we'll talk about why that is, because I think it's very obvious why you're seeing bullish with GME and bearish option activity with AMC. First and foremost, you're seeing bullish option activity with GME because they are at such an important level. GME, if you look at the stock on the charts, which Friday was not the best day, but if you look at GME on the charts, last time they reported earnings was the first time they recorded a net profit in a while, right? It's been a couple years, okay? Just like AMC, they were losing money. But they actually reported a net profit of $48 million. That sent GME stock up 35% after earnings from, a couple days before earnings, around $15 per share to $27 per share. That was a very good move. The stock got shorted down at that point. The short interest was not 20% when AMC reported earnings. It was more so like 10%, if I do recall, when AMC reported earnings. Go ahead and pull that up. Let's go to the official reports. No, I guess it's been high. Maybe I underestimated. No, it's been high. It was like 10%, 15% in earlier 2022, and it does fluctuate quite a bit. But GME rallied and then kind of got shorted back down after earnings because people are like, hey, is this just one earnings or can GME do that again? So I think you're seeing a lot of bullish activity in GME because they're at the same level they were at the peak of last earnings. And now we're going to be getting a new earnings report coming in between June 2nd and June 8th. Hopefully around that time frame. And if they do another net profit, that's going to send the stock up probably to $40 or higher, right? You're looking at a major catalyst right there. But the expectation is for a loss of 12 cents per share. So investors, they're like 1 foot in the door, 1 foot out the door as far as GME with earnings. Now, with AMC, on the other hand, investors don't have the highest the highest expectations for profitability with AMC. We just had earnings. We kind of know what to expect. They're going to lose some money. AMC lost less money than expected, but that didn't seem to matter. The stock went lower after earnings. And this is because AMC has the court case going on. That is the underlying thing that investors know, especially hedge funds. There's going to either be a really bullish catalyst or a really bearish catalyst. Has nothing to do with the fundamentals of AMC, right? Whereas GME, it's all about the fundamentals and what earnings are going to be. And there's, analysts can guesstimate. Sometimes they're right, sometimes they're wrong. But you kind of know what to expect from GME to a reasonable extent. We have no idea what's going to come out of the court case. So that's why we've been a little bit more bearish as of recently than something like a GME. Now, at the same time, I'll tell you, AMC stock is holding up. It's not falling under the demand zone in between $5 and $4.80 per share. You're staying above that 50-day moving average. So all in all, you're still in a bullish uptrend. Same thing with GME. But point here is there's external catalysts to AMC that have nothing to do with the fundamental business, and GME is more so kind of fundamentals driven. Now, I think that makes GME a little bit more risky, believe that or not, because of they've already hit profitability last quarter. If they don't do that again, the stock's going to plummet. AMC, on the other hand, has a lot more room to finally get that net profit. When that happens, some point in 2023, AMC stock's going to take off like a bat out of hell, okay? That's what's going to happen. If GME cannot sustain this profitability, it's not going to be a good thing, okay? So I think all in all, when you weigh those down, it's pretty neutral. Now, with this court situation, something we can just, we don't know. We can't forecast that. We don't know what the judge is going to do. She has the power to outright dismiss the settlement and say this is not legal and you're not doing this reverse split. That's a possibility. At the same time, I think AMC also has a bullish there, right? The fundamentals improve if they do the reverse split. That's why I'm kind of agnostic to the whole thing. I don't care what happens with the courts. Ultimately, it's bullish fundamentally to raise more capital. It's bullish short-term price action if the judge were to dismiss this case. Whichever way you want to put it, doesn't matter to me. We end at the same result, which is a short squeeze in the long run. So those are kind of the main differences and similarities with AMC stock. I like both of these names right now. And as I said in the beginning of this video as well, you will likely see these stocks kind of run in tandem, right? If GME has another quarter of profitability, that's probably going to boost up AMC stock as well. Now, something I could see happening at the same time is the court case with AMC might not negatively affect GME. If it's negative, right? If it's positive, you might affect GME in a positive way, but I wouldn't expect too much out of there. So I think there's a really strong bullish case for both of these stocks right now, AMC and GME. I think AMC falling from the $6 level down to the $5 level gives you a little bit better of a risk to reward, but GME also has a big catalyst coming up. So when I boil these two names down, they look good. Both of them look good. And that's why I've started to make more videos talking about GME as well, because things do look pretty positive. Now, if you look at the institutional ownership of both of these names as well, AMC stock seen its peak ownership in June of 2022. It's fallen a little bit, okay, but it's still much higher than 2020 levels. If you look at GME, its lowest institutional ownership was June of 2022, and now it's went higher. It's still not to the levels it was in 2019, which is kind of exact polar opposites of what we're seeing with the institutional ownership of AMC, right? GME was at the lowest, AMC was at the highest. Now, GME is not quite to pre-pandemic levels of institutional ownership. AMC is still well above pre-pandemic levels of institutional ownership. So I would say more so leaning to a positive here with AMC, because you still do have a lot more institutional ownership compared to pre-pandemic levels with AMC stock, when AMC was a better fundamental business, okay? So I think those are important to point out. Institutional long values in AMC worth about $644 million. And then GME has institutional ownership worth $1.9 billion, about 30% owned by institutions, and AMC is about 26.85% owned by institutions. So it's all, relative, right? GME has a higher percentage owned by institutions, but AMC has seen this recovery from institutions a lot more so. And I'm not sure if these numbers have completely updated themselves from the last 13F filings that we did just get. So we'll see how this does play out. AMC tends to stay about 30% institutional owned. Now, with AMC and GME, a lot of people forget this, okay? That publicity and attention are important when it comes down to short squeezes, okay? GME and AMC, I give them both a positive here on this factor, right? Compared to your Joe Schmo stock that's running in the markets, a biopharma stock, a whatever stock. They're not going to have as much attention as something like a GME or AMC, okay? Now, that's a good thing, right? Because that's something you cannot quantify. You cannot quantify, and I cannot sit here and say AMC or GME is better by a percentage than a random stock when it comes down to getting a short squeeze. Because everyone knows about AMC and GME. Not everyone knows about a random stock. So that's a big reason why I'm much more excited about short squeeze potentials on both of these names compared to random runners that you see in the markets. Now, some do go absolutely crazy, but they're not going to get the same level of attention as a GME or AMC. The news isn't going to talk about your random runner compared to a GME or AMC, right? You have Netflix documentaries and movies on Amazon and other platforms based off of exactly this, okay? The short squeeze that we've seen in AMC and GME. So, positive for both. Now, I would stay with AMC. There's a larger investor base with AMC. Okay. But there's also a smaller flow in GME. There's a couple different, back and forth factors that make one better than the other in certain areas. But long story short here, I think both of them are going to run here over the next days and weeks. As far as how to play these, right? You might make more on shares with AMC than you would on GME because you can get more. And this is granted if the court date does not have a bearish effect on AMC. Let's just say if it has a bearish effect on AMC, then this information might change. But all in all, you can get more shares of AMC than you can of GME, and AMC tends to rally a larger percentage than GME. GME's rallies tend to be like 40, 50, 60%. AMC rallies can be hundreds of percents. So I think shares make a lot more sense with AMC, but with GME, I kind of like the options more because of the lower flow, because of the price of the stock. You can go out and buy like what I have right now. Come join the trading community. Link down below in the description of this video. You can come trade with us. It's never a recommendation. None of this is a recommendation. Let me say that right now. This is not a recommendation. Buy, sell what you please. I am not a financial advisor. I'm not a financial planner. I do not have a crystal ball, and I cannot tell you when these guys are going to run, if they're going to run in general, okay? They may never run. Quick disclaimer there. But I do like GME more with the options because you can go out and buy $30, $35 calls for cheap, and GME could easily double upon good earnings or go higher than that, right? Very unknown. But due to days to cover being so high and the short interest being 20%, and some of these other factors we've talked about here in this video, I prefer AMC shares. I prefer GME options. And I like both of these names, guys. So that is going to do it here in this video. Thank you for watching. Let me know how you guys feel about AMC as well as GME over the next couple of weeks. Which do you think is the potential to have the biggest run or run the soonest? You know, when do you guys forecast these stocks to go through short squeezes? A lot of things to like, not a lot to hate here. So that is going to do it for this video. Thank you for watching. Enjoy the rest of your weekends, and I will see you in the next one.